So to wrap us up here today, I want to do a quick deep dive into the D2 and the D1 entry signals. So I know a lot of you guys watching are in ASFX already. This is what we teach in the advanced course. For those of you guys that are not in ASFX already, the D1 is an in-trend pullback trade. It's very similar to what we teach in our beginner course, which is called the A1 entry signal. These are the three signals that I trade every day. These are the three signals that we've back-tested and proven profitable in the past. That's what you need to be able to go forward and apply those systems in current market conditions, because if it's worked in the past, you got to assume that the statistics should stay the same going forward. Now, you do forward testing every day. You keep up with those markups to see if the system is changing. But over the last 4 or 5 years, the A1, the D1, and the D2 have continued to show promising results in the live market and in the back testing, and that's why that's all I focus on, and that's what we teach. So today, like I said, I want to focus on the D1 and the D2. The A1 is a breakout trade. It's those breakout entries coming off solid EMAs with really clean trend. In-trend breakouts is where we find A1s. So we're not talking about that. We're talking about D1s, which are at pullback points in overall trend after we've identified the bias. And we're going to talk about the D2, which is a reversal trade, either off a significant level, being high of week, low of week, maybe the maxed out ADR price for the day, significant price levels like that where we could see price go counter trend and reverse. Before we get into the chart here and I show you the technicals of these two setups, understand that the first thing you have to do is find a system that aligns with your beliefs. If ASFX systems, the A1, the D1, and the D2, if they don't align with your beliefs, you're not going to be able to trade them well. That's happened before. For me, they work well. It aligns with my beliefs. But even more detailed than that, I trade the D1 and the A1 way more than I trade the D2. And that's the first thing we're going to talk about here is a D2 entry today on EuroCAD. The reason why I don't trade the D2 that much, even though we have backtesting that proves it profitable, is because I'm not a contrarian trader. And I said to you before, these D2 trades are reversals. So even though it's a part of my playbook and it's a part of the systems that we have proven to work, that doesn't mean I'm taking every D2 signal that I see. I have a specific D2 signal that I like to see when I'm going to take that trade. So as we go through, I'm going to show you the technical setup of where this entry comes from, but understand the D1 and the D2 are almost opposites of each other. One is great for in-trend traders, the D1, that's what I love, and the other one is great for counter-trend traders. I always reference Alex Alfonso. He was a guy who was trading pretty actively with us back a few months ago. He's doing really well for himself on Twitter. You can go follow him, and on Instagram, you can follow him now. He was the D2 king. He crushes D2 entries. He's really a great contrarian trader. I'm not. We complement each other very well. I learned a lot from him. He learned a lot from me, and that helped us both grow. So as we go through here, understand, if the D2 doesn't speak to you, you don't have to trade it. Like I didn't trade this idea I'm going to show you on EuroCAD today. I don't like the D2 entry enough to feel confident that, hey, I want to start my week with that. That's going to be my first trade. No, because if I lose that trade, which I would have today, then I would say, why did I take a trade that's not at the top of my playbook? Within your system, this is the last thing before we get into the chart. Within the system, you have your entry signals. Inside those entry signals, which are the A1, the D1, and the D2, that's what we teach in the course. Inside those signals, every trader in ASFX trades them slightly differently, sees a different breakout that they trade. Maybe you trade the shift candle in the A1. Maybe you trade the 2-candle, 3-candle formation. Everyone is a little bit different. And over time, as you practice and get more experience, you find that nuance that you can master that aligns with your beliefs. Those signals, this specific A1 entry, those ones go in your playbook. And at the top of your playbook, you have your most confident trades that whenever they present, you know how to trade it. You've traded it a million times. You've got markups of it, back testing of it. You know that that's the trade you want. That's my A1 and D1 for me. The D2 is a little bit lower on my playbook list because it's not a trade that I'm as confident in, but still, to get better, to gain experience, I mark it up, I put it in my chart markups folder, I put it in my backtesting spreadsheet, and I document these ideas so I can get better at it over time. So let's go into the details here with this D2 setup. Now, of course, this is now happened, the entry has already happened and the stop loss would have already been hit, so you can say we're looking at it in hindsight. But let's put it in replay mode so we can identify how this setup presents. So it's going to come whenever we have divergence setting up against the trend. The trend here is short bias. The higher time frames are short biased. We had this move lower so far every day this week. Monday, Tuesday, this has moved lower. So today, you would keep that short bias. However, as it starts to break the 50 EMA, which is this blue line right here, That's a line that we like to call it our change of bias line. So overnight, it holds the 50 EMA, which is a good sign for shorts to see it continue to the downside. However, as it comes off that 50, it builds bullish divergence on the bottom. We call this bullish divergence because you identify the divergence by the direction that the RSI is moving. So with this rising RSI, falling price action from the RSI low to the price action low, this is the lowest price action body right here. Price is falling, the RSI is rising, that's bullish divergence. After the bullish divergence is set in, we look for breaks of the 50 EMA because that would be a change of that short bias, either coming into consolidation, chop, sideways movement, or coming into a rise, coming into a reversal. So here we get our first break of the 50 EMA at like 3:15 last night, early this morning, whatever you'd like to call it. And then that second break of the 50 EMA happens right here while I was awake at 6:15. The thing that I don't love about this trade and why I didn't jump into this, even though we identified it in the group chat, we called it out, everybody was able to do it if they'd like to. The two things that I didn't like about this was one, market sentiment is still very bearish today. You see the TDI still under the 50 value, still very bearish at the time of the entry. That's the first thing. The second thing I already mentioned is that the higher time frame trend is still short biased. So in a situation like this, even though we have the potential for it to reverse and come higher, the next target would be your next EMA, which is the 200 EMA up here. So overall, the bias is still short. So you're going counter trend. And then on top of that, this would be my first trade of the week. And I don't want to rush into or take a counter trend trade to start my week because I know myself. I know my belief system. I trade better in trend. It's where I find the best breakouts. So when this presented, mark it up, put the text on it like this. You don't need to take the trade. You don't have to take every trade idea that you see. And it ended up being a good idea to not take the trade because it is following the overall higher time frame bias and it is coming lower today. Notice it pins the divergence line right here. This divergence line will continue to be another type of almost like an EMA, like a moving support line as the day goes on. If this can break under that divergence line, under the low of day price level, and use that then as support for another move down, that's where we could come in and continue to look for entries to the downside, trading in trend then. But for this D2 entry is explained now by this 50 EMA break, right? Structure here, you can see higher lows coming in. That's where you would use your stop loss. It's in a short-term upshift as well. However, knowing how to read the higher time frame trend, just knowing how to read the market sentiment line here today, seeing that it's bearish, that can keep you out of these losses. Okay? If that doesn't make sense, let me know. Can definitely explain that. But even here, look at how it's pinning this divergence line. Put a question, put a comment in the chat or in the comments of this video, and I can definitely answer that for you. Okay? Now let's transition from this counter trend trade to the in-trend trade that's presented today. These are the only two signals that we've had today. You had that D2 on EuroCAD, and then we've had this D1 into A1 on GBP NZD. Now, this is getting shoved lower here based on this CPI news that just came out a few minutes ago on the US dollar. So we're going to go back again in replay mode before that. So here, first thing you got to notice is that market sentiment line is bearish today. So that feeds the short bias. And if we go back to yesterday, you can see this moved lower. So that short bias is still in control. The issue here that you have to be aware of when you're looking to take a position like this is that bullish divergence is present on the bottom. But where is price action at the time of this A1 entry presenting? The reason that this is an A1 is because your 8 and 21 EMAs are crossing under there. That's a shift candle. See how I wrote on here in my notes? Shift candle A1. It should say off, not if. The reason why this is not considered a D2 entry is because we are under the 50 EMA. We're in a downtrend. EMAs and L50, market sentiment, say to be short biased, and we're not above the 50. As it was above the 50 here, you wouldn't want to be looking for shorts. You would want to wait to see if it comes back down, or you'd want to look for D2s. But again, we want to stay in trend. So now, with that divergence in our way, instead of us using this white line of the rising RSI and the falling price action, instead of us using that to buy it, we wouldn't do that, like I just said, because we're under the 50. We read risk reward to that line to see if we can get at least 2 to 1. That's where I find we will our backtesting tells us we need to be, is at least 2 to 1. And if you read this risk reward to that divergence line from the entry signal, it's only 1.1 R. That could be a lot better. That's not something that I would love to trade. However, we don't only have this A1 entry presenting as the shift candle. This white line, if you read this little notes, this is saying here on the 1 minute chart, we've got bearish 1 minute divergence. So if you go take a look, that bearish 1 minute divergence looks like this. The RSI high at 23.51 right before midnight is set right here. Price action continues higher as we get to 2:30, 3:30 in the morning. That bearish divergence tells us that we're ready to move lower in overall trend, the overall trend being short based on the 15-minute movement, coming off that significant level of the 50 EMA, this zone right here near the Asia high. So this is how you use the 15-minute time frame and the 1 minute time frame to identify the D1 signal. Now, you can trade the entry at the A1. You can wait until retests after the A1 has presented and trade it as a D1 and an A1. Either way, that's what we explained in the course, is how you can go in and find those specific risk-reward setups within these entry signals. But this is a signal, because you're trading in trend. Now, it looks like it was waiting for the news. It's very tough to lose money here. If you look at this, even if you were a little bit late, it still falls almost 2R before the news. And if you lock your stop before the news comes in, you get stopped in profit. And then, of course, it moves lower, but you don't know where the news this morning was going to take it. We don't know if it's going to shoot it up or shoot it down. So it's better to lock the stop loss before that news comes in anyway. So here, even if you're a little late, even if your risk reward could be better, you can still make money because you're trading in trend versus trading counter trend in the D2 signal. Not to say that the D2 signal doesn't have power, because it does. It's extremely powerful. However, there's other factors that go into a D2 entry that EuroCAD didn't have. And there's other factors that go into a great A1 or D1 entry that GBP/NZD did not have. But now I want you guys to hopefully see the difference between the L50 on GN, the divergence on GN, the setup on GN in trend versus the L50, the market sentiment, the divergence, and the setup on EuroCAD. One was saying counter trend, and starting with that divergence and the 50 EMA breaks. That's where we find the change of bias. But don't just get sucked into, oh, it's divergent, it's breaking the 50, it's reversing. No, it could chop sideways. You got to go with the higher time frame trend. And on GN, that higher time frame trend was clearly short biased. So that's where I will find more confidence. Someone asked me, Austin Mendoza asked me in the chat this morning, why would I trade GN, not EuroCAD? He said, why didn't you trade EuroCAD? And I said, because my bias was more aligned with GN. I was looking for an entry on GN. I didn't get it, but I was watching for an entry on GN more than trying to force myself to trade a D2 on EuroCAD. Because I know myself. I know where I trade best. It's in trend. So I'm going to lean that way always. I hope that makes sense, everybody. I hope that clarifies the difference between the two signals that we teach in the advanced course. And if you want to find out more information, I've got links in the description for you on that.